Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about AIRBNB IPO, which is in program to go public on Thursday, December the 10th. And initially, the valuation of the company was around 35 billion, and now this is from tonight or this morning, basically depending on where you're from. They say that the IPO price could hit a target of $42 billion valuation for Airbnb. So basically, instead of raising around 2.3 billions in the IPO, this number can reach $3 billion. We are gonna see whether I like the company, whether I want to invest in the company, what I like about it, and what are the main risks. So the only thing I ask you guys, as always, is please leave me another like. It's very important to grow my channel and to reach more people. So I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. So quickly before we start, I would like to tell you that this is the first of two videos that I'm gonna release on Airbnb. Why is that? Because the company is new, so to value and to talk about an IPO, it takes a little bit of time. And in a single video would have been longer than 30 minutes, so probably you don't like long videos. So I thought that split the content in two shorter videos would be easier for you to follow. So in this video, I'm going to talk about the company, what I like about the company, and the risks involved. And in tomorrow's video, so make sure you subscribe so you don't miss it, I'm gonna do a fundamental valuation to try to understand what's the fair price of the company, okay, with a discounted free cash flows. Now, first of all, what is Airbnb? I'm pretty sure that all of you already know that. Airbnb basically is a company in the online booking market. So you go there, Airbnb.com, which has been founded in 2008 during the financial crisis, and basically you can book places and accommodations where to stay for short and also in some cases long terms, and now since April 2020 experiences, okay, which is something very interesting in my opinion, and I think that many are underestimating. First of all, how does Airbnb make money? So here we see very specifically, out of a payment, let's say something, a price per night $100, the guest should pay the $100 and then the fees. So this is what Airbnb takes, $12, and then you have taxes, another $4. The total will be $116 paid by the guest, and the host receives $100. Three of them are actually the fees taken by Airbnb. So overall, $97 remains to the host, and Airbnb at the end of this process makes $15. So generally, if you go to read their business plan, they say that out of a gross booking volumes, they take around 15%. However, when you do some calculation, you realize that this 15% is actually a little bit lower, around 13, because of cancellations and refundings. Okay, so that's something to keep in mind, especially in the video of tomorrow when I'm gonna do a fundamental valuation. Here we can see that the annual nights and experiences booked in millions, so this is just the volumes. We see that it actually went up a lot until 2019, 326.9 millions of bookings, okay, and this is the year-over-year change. So started out with 74%, and then obviously as volumes continue to increase, the growth rate has to decrease, okay, this is normal. Here we can see the same data but expressed in quarterly, and we can see that the business overall tends to be cyclical, and that's pretty normal. So one thing to keep in mind when we buy Airbnb is not like a fintech stock, okay? Even though it is said to be a growth stock, it's quite different because the business is very highly related to the travel industry. And the travel industry, as we know, is cyclical. We see how the Q4 overall tends to be lower than, for example, the Q3, which is historically the best quarter for Airbnb and travel. Now, obviously, here we have had the pandemic, but interesting enough, they bounce back very strongly. Their business is actually very diversified, and that's another thing that I like about it. 220 different countries, also by including experiences, 4 million hosts all around the world. They're able to take both long trips, short trips, so diversified business. It has showed to be very resilient during probably the biggest crisis for them. This is the annual gross booking value, so you take the volumes and you add the average cost per night or per experience, which we are gonna see right now, and then you have the annual gross. Now, as they said, out of this, they take around 15%, which, as I told you, in reality is more like 13%. That's how they make their revenues. And once again, when we see the gross booking value, here is in billions of dollars per quarter, and once again, it is cyclical. Now, obviously, why here it is 29% and why instead of the volumes are 31%? Here is a thing of the average cost per night, okay? So they don't match simply because the average cost per night during 2019 has probably been less. So that's why when you take account into billions of dollars instead of just the volumes, you don't have the same 31%. So very interesting is to see that they reached EBITDA profitability in 2017 and 2018, and then a huge decline in 2019. However, as we are gonna see, this is not because of revenues, but it is actually because the company was pushing a lot through product development and marketing costs. That's positive for the long term of the business. In Q3, despite the pandemic, so in Q3 of 2020, they have had actually their best EBITDA margin overall, okay, around 37%, $501 million in Q3 of 2020. So that shows us that basically if they decide to reduce the costs, especially marketing, they are able to be profitable without many problems. When we take a look at the annual free cash flows in the last 5 years, percentage of revenue, 2016 just 1%. It was the first profitable one in terms of free cash flows, and then it reached a peak of 14% in 2018 once again, and on quarterly basis very cyclical. There we see the impact of the pandemic. However, 328 million in Q3 positive free cash flows. Very great bounce back, the best ever, with a percentage of revenue of 24%. Now that they are going public, probably they should stop a little bit of fluctuations between these free cash flows, okay? If they are able to stabilize the free cash flows as a percentage of revenues around 18%, it will be very great for them, I think. Here we can see that historically the gross nights and experiences booked has been growing above 30% year over year for every single month in 2019, and then started pretty great in January, 25%. Remember that the Q4, Q1 are the lowest in terms of cyclicality. And then here, obviously, the pandemic, and we see the disaster that has happened. Now, interesting enough, as I told you, Airbnb is a very diversified business, and we see that the pink is domestic, so US, and then international is the red one. And we see that overall, before the pandemic, it was very near to 50-50. And obviously later on, it is a little bit more in the domestic area, okay? But that's pretty normal. They're just a pandemic stuff because countries they have closed, so it has been very difficult to move from a continent to another, and so that's why this is more in the domestic part. But I think that it will continue to be around 50-50 over the next years. We have a confirmation of this also when we check at the range of the travel. And we see that overall before the pandemic, longer travel, so above 500 miles were pretty common, okay, the red one. while after the pandemic, people preferred short trips, so probably to just go to visit parents and stuff and see places which are not huge cities. Okay, so we see that overall the 50 to 500 range miles has been more common. From here we can see that overall the business is very diversified, and even before the pandemic the top 20 cities were actually below the 10% of the entire monthly booking. And here we can see that overall short-term bookings, so from 1 to 27 nights, are the core of the business of Airbnb, while 28 nights or more tends to be, let's say, around the 10% of the entire booking. Now, they say in this document actually that in the long term, they would like to push even more also with long-term stays, and that for them will be trying to be a competitor of Zillow, okay, especially in the United States. Airbnb likes this market as well, so it is not just the online travel market for vacation, but also it could become a place to actually go there and find a rent if you need, for example, to study at university and stay there 1 year. For the long term, that's another very interesting part of their business. Here, once again, we appreciate the diversification with Europe and Middle East in red, and then US, North America, Latin America, and Asia Pacific. Overall, North America and Europe and Middle East tends to be the biggest slice in the cake, and overall the average, so the average price per night tends to be higher in the US with $164.8 and then overall $116.14. Now obviously I don't expect this number to go higher substantially simply because of the competition. When we take a look at the main competitors for Airbnb, we have at least 3 or 4 of them which are very interesting. Okay, so HomeAway, probably VRBO, and then Booking.com. Okay, that's a big one. And then we have Expedia, another big one, and TripAdvisor. So in my opinion, Booking.com, Expedia, TripAdvisor are probably the 3 main competitors in the short-term stays. And then in the long term, as I told you, Zillow. Now, in the previous graphs, we saw how in 2019 the free cash flow went negative and the EBITDA went negative as well. So was it because of the business? No, it wasn't, because the revenue actually went from 3.6 billion to 4.8 in 2019. However, cost of revenue, especially sales and marketing and product development, they went up from 570 million to 976 million for the product development part, and then another 500 million in sales and marketing. Okay, so overall that pushed actually the EBITDA and the free cash flows negative for 2019, but that was positive for the business. With the product development, actually they came out with experiences, which is something interesting for the business. Why it is interesting and why I like companies like Airbnb and also Uber, as probably you saw in my top 5 stocks to buy, because I think that the job market as a overall, it is quite broken. Especially after this pandemic, you have tons and tons of people who applied for jobs, and then those jobs are a very low number. Okay, so people don't get the jobs they want. People, even if they get the jobs, they don't get paid enough as they should be paid. So I think that the normal job market is quite broken, and especially younger people are starting to realize it. And we saw that overall it is increasing the number of entrepreneurs, and obviously these kind of companies, which allows hosts in this case, but also Uber drivers and stuff, which allows people to work as a freelancer. I am bullish in this company. companies because, well, when you have a job market which is broken, people they tend to find other ways to make money. And experiences actually are very interesting because people can see that as a way to actually marketing their selves, okay, their passions or also their skills. If I make you an example, you make a product, okay, a sort of a niche product that can be particular cheese or a wine or something like that. Through Airbnb, you can market this thing, and actually visitors, they can come to you and see your building process or your process to make the cheese or your process to make the wine, and so make even further money by doing that. And then they can stay to you, they can buy your products. So this experience stuff add together to the original rent business which Airbnb was born for. It's very important. We see that the main costs always been product development and marketing. So I can imagine that as the firm become more mature, these costs they can actually go down. Okay, probably they will be able to scale the business and make more money with less marketing. And I'm pretty confident about that because, as they say actually in this document, people who use once Airbnb, they tend to come back later, okay? So you don't need a continuous marketing. When it comes to analyze the financial situation of Airbnb, we have to say that the company right now is pretty liquid. They have a current ratio above 1.6, which is interesting and very acceptable. However, we have to remember that during the pandemic, actually they took $1 billion in debt at a very high yield, around 10% yield. And then they already had a previous debt of over 1 billion as well. They are doing the IPO so they can raise around more than 2.5, and now at the price of today that they are saying today, $3 billion. So actually this IPO helps them to escape this kind of situation and raise more money. Now, I like the company. Yes, I really like the company. I'm really bullish on, as I told you, on these kind of companies which allows people to have another streams of income in different ways and to market themselves. However, what I don't like very much is this kind of huge IPOs, okay? So above $40 billion probably is a lot. And why I say that, these kind of companies, they could have gone public way before, okay? What I don't like about this is that usually you have private equity firms that they have already made a lot of money out of these companies, okay? And most of the times these huge IPOs allows these private funds to actually exit the investment. I like more when a company goes public and the valuation and the company is below $10 billion. So it's a new company, risky business, and not constantly profitable yet, but you buy it for less than 10 billion. And then even though the company, if it reach a huge achievement of, let's say, $100 billion in market cap in the long term, which is a lot, you do a 10x on your investment, which is great. However, these kind of companies, which they go out already 40 billions, probably the market euphoria and enthusiasm can push on the IPO date the company to around 50 billion. And you buy a great company, but it's not the same thing as if they did the IPO 2 years ago, okay? You know what I mean? You buy a great company, but a lot of money has already been made in the private side, okay? So that's what I don't really like about these huge IPOs. I prefer more humble one, a small one, okay? Because you have, as a retail investors in the public stock market, you have the opportunity to jump in great stocks at a lower market cap. However, in this case, a lot of money has already been made. So anyway, overall, in terms of business, I really like the company, and I'm planning to buy some at the right price. What is going to be the right price? Just wait until tomorrow, and I'm going to upload my fair price for the company. So For today, that's it, guys. I hope you find this video interesting and leave me a like and leave me a comment below. Tell me, are you planning to buy Airbnb in the IPO day, or are you willing to wait and see what is gonna happen? So leave me a comment below and subscribe to the channel, and as always, guys, have a wonderful day.